Thank you for joining us at our Q3 2018 quarterly update webinar. My name is Sunil Mampilli. I am the Events and Partnerships Executive here at Preqin. During this session, they will be going through our key findings and trends of our Q3 2018 quarterly update report. If you have any questions, please feel free to enter them in the chat box at the right bottom hand corner. We will do our best to answer all questions during this webinar, but if we are not able to, someone from our team will reach out personally afterwards. At the end of the webinar, there will be a quick 5-question survey. Please take a moment to fill this out so we can improve these moving forward. Now, to get things started, I would like to introduce our two presenters, Sam Mitchell, Business Development Manager, and Maeve McHugh, Head of Service Provider Products.
Thank you, Sunil. My name is Sam Mitchell, sitting here with my close colleague, Maeve McHugh. And we're just going to touch on a brief overview of Q3, touching on some key trends within the quarterly reports. And think of this as almost like a teaser for the reports themselves.
Thanks, Sam. Do you want to give some background on Preqin quickly?
Sure. Yeah, for those of you who may not be as familiar with Preqin, we are a global research and data provider active in alternative assets. We have 7 offices around the world across 3 continents. And Maeve, what I think is interesting to note to the audience is our recent expansion into Asia, where we do see a lot of investment opportunities, and the region looks to play a key part as a source of capital in the next few years.
Yeah, absolutely, Sam. Those are some of the things that we're going to dive into a little bit during this webinar. So here's a quick agenda of some of the points we're going to touch upon. We're going to pick out some interesting key findings for you guys, kind of jump around a bit between the asset classes, and then let you guys dive a little bit deeper into them when you get the quarterlies. All right. Sam, you want to start us off with some fundraising?
Sure. Thank you, Maeve. So we see no signs of fundraising slowing down here across private capital. However, we are seeing consolidation here the last several years and into Q3, as some of the global asset managers are raising even bigger funds and investors looking to re-up into those partnerships. Now, looking specifically at private equity, as one of the larger asset classes in private capital, what's interesting enough actually is, for the first time in 5 years, Q3 fundraising has surpassed Q2. While we're unlikely to match 2017 total fundraising figures, 2018 is on par to match a strong 2015 and 2016. We'll also dive into a couple other asset classes in this section, just some high-level stats surrounding real assets. Fundraising is healthy and on track to be a record year in 2018. And looking at our darling asset class of alternatives, private credit is on track for another stellar year.
Yeah, so as you can see here, direct lending continues to lead in Q3, unsurprisingly, as it's been the trend for the past several years. I think the really interesting point within direct lending, if you dive into that one, is where Europe is tracking in aggregate capital versus the U.S. and North America this year. Actually, up until Q3 of this year, Europe was outpacing North America in aggregate capital raised, and then in Q3, North America pulled slightly ahead, but as you can see, it's still really close. There were a couple of fund closes that came in.
Sure.
Yeah. I think what we're seeing here is a reaction to some of the saturation in the U.S. market. There's a lot of competition in that fundraising market, saturation in terms of deals, and we're seeing a lot of great opportunities out in Europe, both on the deal side and on the fundraising side, with a lot of the expanding geographic scope of investors looking to get into the asset class.
Yeah, no, Maeve, I think you touched on some key points there. Europe is obviously a little earlier in the credit cycle, so I think that's where we see a lot of those trends stemming from. One other thing interesting to note in this chart is 2015 figures. Now, Europe actually surpassed the U.S. in total funds raised in 2015, but only had about half as many funds closed that year. Could this be just due to a couple large outliers?
I think we saw in 2015 that it was a trend led by the top. It was a top-heavy movement. And in 2018, we saw that it's a much more widespread trend. In 2015, the average fund size is well over $1 billion. And in 2018, it's much closer to the previous years where we'd expected to be.
I think that's fair.
Yeah, similarly to direct lending, in 2015, we're seeing that kind of top-heavy trend continue or appear in the real assets market here in Q3 2018.
Yeah, $90 billion year to date closed within real assets, which, if the listeners don't know, we define real assets as infrastructure and natural resources. And we've seen some massive final closes this year, Maeve. Just touching on a couple here on the screen. KKR closed a $7.4 billion core infrastructure fund this quarter, followed by a couple other global leaders in the space here. So we expect this trend to continue to year end.
Yeah, and that $90 billion figure, $45 billion of that was closed in Q3 alone this year. Yeah, so half. So looking ahead to what's in store for the rest of the year and into 2019, we are seeing a record number of private capital funds in the market right now.
Yeah, to that point, if we just look at private equity alone, just under 4,000 funds out raising capital right now, targeting just under $1 trillion. So, a ton of money out there being raised, and how much of this is going to close before year end? And I think more importantly, how and where will managers put this capital to work?
Yeah, and we'll get into that in a few slides, I think, a little bit more. But I think one of the more interesting points on this slide is over to the right, you'll see infrastructure, but we actually are seeing a record number of infrastructure funds in market seeking a record amount of capital. Due to, similarly to private equity, similar story there from last year, we've seen large distributions back to investors from their infrastructure commitments. And LPs are looking to reinvesting it back in that game. They're seeing opportunities there. There's mandates out. And I think, we're going to see some success there.
Yeah, and I think that's a trend we're seeing across private capital. But now moving over to hedge funds. As public markets turbulence continues, managers will increasingly look to launch equity strategies. To take advantage of opportunities on the short side and pricing differentials. We think that, with the recent volatility, these equity strategies are positioned well for success.
Yeah, we've seen a record high number of fund launches, a 5-year high, and nearly half of those are in the equity strategies.
Yeah.
Right.
Hedge.
Yeah, absolutely. We've touched on public markets and the hedge interplay. So let's take a look at how private capital has compared to the public markets over the past 18 years or so.
Sure. Thanks, Maeve. As you can see here, private capital has outperformed the S&P over time, and we expect this to continue moving forward. unlike hedge funds, where during the bull market run with the S&P, equity strategies had struggled.
Yeah, and I think we can look at this chart in a lot of different ways. And we're going to take a little bit of a deeper dive into some of the private capital performance and dry powder figures that you can see even more of in the quarterlies. So in this one, I think what we're seeing here is lots of capital returned to investors that has been reinvested as a result of, the distributions in 2014, 2015, 2016, and then that drove that record year we saw last year. In 2017, the distributions normalized a bit, and we're seeing that reflected slightly in the just a touch lower fundraising figures we're expecting for private equity in 2018.
And look, speaking about performance and other metrics like dry powder, what you can see in this chart is real estate available capital has spiked in recent years. Again, a trend that we've seen across the board in private capital. Now, could this be a cause for concern? It very well could be, right? The question remains for managers is,
it depends on the competition.
Yeah.
What we're seeing is an increase in competition for quality deal flow, and as a result, managers are leaning heavily on their experienced team members on the origination side.
Right. I mean, it's a seller's market.
Yeah, absolutely. And kind of following through with that point, while hedge funds weren't able to catch the tailwinds of the public markets in Q3, and the disclaimer is, of course, that we don't expect, hedge funds aren't meant to outperform necessarily.
Correct.
But we do expect to see some capital inflows, some additional capital inflows into the hedge world amid the increasing volatility in the public market.
Yeah, I think the landscape is setting itself up nicely for hedge funds, and yes, we'll see how that plays out.
Yeah, and talking about dry powder and performance, we're still seeing, of course, you can see the venture capital deal activity is continuing to post up really strong numbers. So these managers are still putting capital to work at really high levels, getting it out there. And we're still seeing that high average deal size. But you can see here, and also in the next slide, we'll show you for buyout deals, that's the average deal size is kind of leveling out the aggregate deal value. And
yeah,
Sam, you want to?
Yeah, sure. And I think just diving into some of the VC figures, actually, if you back up as well.
Yeah, sure.
We are seeing a lot of activity in emerging markets in APAC. I mean, more specifically in LATAM, there's been an uptick in VC activity in the last year or so, specifically in IT and fintech. And we expect emerging markets to continue to provide attractive opportunities within VC and in buyout, really. Just a couple to note, if we're looking back at APAC, Alibaba and SD Investments both invested in a $3 billion transaction this quarter, and Hangzhou Mouth-based communication network, the telecom deal in Greater China. So, a big deal to put the spotlight on. And then also on the buyout side, two local Chinese investors allocated to Yum restaurants this quarter. That was a massive public-private deal valued at $17.6 billion, and in the consumer discretionary industry. So we're expecting some of these large transactions to continue. A lot of that is driven from the public to private.
Yeah, and I think moving on to this infrastructure chart, we're seeing the exact same trend in terms of deal value and the pricing aspect of things. And as Sam was mentioning, we're seeing a lot of movement towards the emerging markets and emerging sectors on the deal side due to competition for quality opportunities. And then if we back up a few steps as well, we'll also see fund managers go into emerging areas and geographies for new sources of capital as those investors in those areas look to allocate more to the alternative space. And we're still seeing, very strong investor confidence.
I think just touching on the opportunities in emerging markets before we do take a look at the investor appetite. I think what's really driving this is, pricing efficiencies in established markets are pushing managers and investors to take a much deeper dive into some of these less established markets, looking for inefficiencies and strong returns. And we see investor appetite also looking to emerging markets and APAC for yield as well.
And as we can see here, this is from our H2 2018 Investor Outlook Survey. The investors are, quite confident still in their managers to find those great opportunities, those high-quality opportunities, and are looking to invest more capital. So this was done back in the summertime, and what we see here coming through in Q3 mandates is really reflective of that as well.
Yeah, and just to note, if you look back on the investor appetite chart, you'll see investors are looking to allocate a lot less to natural resources in the next 12 months, and that's reflective here in in the number of mandates this quarter, as natural resources is at the bottom of the barrel here with hedge funds.
Yeah, so I think one of the interesting points to pull out of here is in the real estate area. There's so many places that we could have chosen to go here, but I think that this is an interesting one because it speaks a bit to the market cycle. What we're seeing here is a large increase in those interested in distress and in debt, and I think distress is becoming more attractive this late in the cycle.
Yeah, and I think just looking at private debt overall, Maeve, whether that is corporate direct lending or real asset financing, unlike private equity, which is looking more at upside, what is unique to private debt and why LPs really do like the asset class and will continue to allocate is really just due to the reliable income streams. This helps mitigate the J curve, as private debt will provide more liquidity than some of the longer lockup private equity and other private capital structure funds.
Yeah, absolutely, Sam. So just wrapping up here, some key themes that we are going to circle back on is the large amount of capital in the market, the higher distributions driving the record years last year, a little bit backed off this year, causing the slight back off in the fundraising, and then manager consolidation. More experienced managers raising larger funds, and kind of upping that level of competition in the market on the demand of investors looking for being really comfortable with their managers.
Sure.
So we're really happy to take your questions now.
Well, I was just going to add,
with
consolidation, there obviously is consolidation and some concern and uncertainty in the space, but overall, the health of alternative assets, remains strong, and investors will continue to allocate to alternatives at large, for the rest of the year and into the new year and the coming years. So, all in all, it's a healthy industry.
All right, so if anyone has questions, please send them through, and we'll be happy to answer those.
Cool. So we have a couple so far. First one, you mentioned there were some outliers in 2015 that pushed the European direct lending fundraising to be greater than North America. Can you explain in more detail about what those were?
Yeah, no, that's a great question. So yeah, just to recap from that slide earlier in the presentation, we were looking at direct lending specifically, and we're looking at how it matches up between Europe and North America, and Europe really on the heels of North America in terms of total funds raised this year. But looking back at 2015, yes, I mean there were some outliers which allowed Europe to surpass the U.S. in total funds raised. I mean, a couple, just to name, 5 or so that were over $2 billion was Ares, Blue Bay, Park Square, ICG, and Ardian all had, massive fundraisers that year, which really pushed Europe over the top.
Okay, great. Next question is, where can I find the Future of Alternatives report?
So we're going to follow up with an email after this webinar that will give you links to those reports, and then you can also always access them through the Prequin Insights platform. You'll find that just if you go to prequin.com, it'll be right there at the top, and you can take a look around, download the data packs, and investigate further, have a look around. It's a new platform, so we're excited to get your feedback.
We have one more question. Can you touch more upon the hedge fund outlook going into 2019?
Yeah. Well, I mean, as we kind of discussed throughout the presentation, hedge funds perform at their best in, volatile markets, right? So,
Looking for a hedge. Yeah.
Right. But as we've been kind of riding this wave of the bull market in the last 10 or so years, we think that a correction is due, and
at some point, who knows?
Right, who knows when? But as volatility increases, these active managers, will be able to kind of launch products that will allow for to protect the downside and
take advantage of some of the opportunities that will arise due to volatility.
Right.
The short side, some pricing differentials, things like that.
And we can, we can also pull some more stats around hedge fund launches and asset flows.
Yeah, I think
if you want to follow up with us after the webinar.
Yeah, I think you'll find some deeper information that you might be looking for that we didn't have in this slide in the quarterly itself.
Well, thank you everyone for joining us today. If you have any more questions, feel free to submit them and someone will get back to you shortly. When we end this session, there will be a 5-question survey. Please take this quick one so we can see how we can improve these webinars moving forward. We hope you found this webinar useful and look forward to seeing you at future ones. Thanks.